Okay. Hello, everybody. We're gonna go over today on the review and replay of Monday. So it's gonna be about yesterday's session, which today's session was very interesting. I expected this to happen. I mean, I said it in the last Zoom uh, video. We were on an uptrend. We're trending higher. We just opened in Globex and we're still higher. Actually, the last time we spoke, I said my target was 35.30 and that's the high. So the target was met. So I'm gonna go ahead and it's gonna be the same as the last time. I'm gonna replay Monday. I'm gonna talk about I actually only took one trade on Monday, and it wasn't early and it wasn't late either. It was about midday. It was about 2 hours after the market opened, and it was a very profitable trade. It was about 12 points, and it was a pretty the trade came to me, right? So also what happened was you cannot be out there looking for trades. That's a very big mistake a lot of people make, is that people are looking for trades. You're looking for a signal, you're looking for an indicator, and really what you're doing is just forcing the trade, and it's not going to end well, because all you want to do is make a trade to make money, and that's not trading. You have to wait for the trade to be there, for the odds to be in your favor, for the stars to align, so that when you take the trade and you put your money at risk, you have the best chances for that trade to work out. Are all trades going to work out? No, obviously not. That's why we have stops. That's why we have risk management. That's why you have to be very disciplined in your risk management and be very careful with your emotions, because if you get a little out of hand, you can get into a hole very quickly. So without further ado, I'm just gonna go ahead and start with the replay. Please, I'm gonna be taking questions, but I'm gonna say when, so that I can go over the explanation and then we can ask questions. And I'm gonna ask everybody also to please stay on mute, so we can record this and upload it to YouTube. You can ask everything or write whatever you want in the chat, but please stay on mute. Okay, we're gonna go ahead and start the replay. Right now, just for background, we're looking at the market profile again for the S&P 500 futures contract, the E-mini contract. And this is the overnight profile. This is Sunday night. And this is last Friday's profile, the one we covered in the last meeting, right? So we have for references, you know, the references I like to use, which is the previous day high, which in this case, we're going to be looking at Monday. So this is the previous day high, meaning Friday's high. This is the close, the on-night high, the on-night halfback, which is right here. I'm going to move it right there. The overnight low. And we're gonna see this is at 50 times the speed. So coming into the day, we have again one. Okay, this move. Just wait. Coming into the day, we have 100% net long inventory. Why? Because remember, we look at the close and we have the inventory is long because all the activity took place above the close. So the inventory was long. We expect a correction to overnight inventories, meaning some kind of selling. So we opened right here. We start to sell off. I'm going to speed it up because we're going to look about the first 2 hours. So the first 4 periods, each letter is a 30-minute period. So A is from 8:30 to 9, and then B period is from 9 to 9:30, and then C period is from 9:30 to 10, and so on. So this is the time remaining on the period, just so you know what this is. It's going fast because it's a higher speed, so we can watch it. So right away, you can see this orange letter is the open, and we have gone back and forth through the open. Automatically, when I see that the market is going back and forth through the open, that means there is no confidence either way in the market. There is nobody that was waiting to sell right away when the market opened. There was nobody that was waiting to buy a lot right away when the market opened. It's just opening and it's auctioning up and down. It's going nowhere. We have a small range, but the very important thing is that we are looking at this spike that happened on Friday. If you remember the squeeze that happened, most of the time was spent down here. So you can see how this puck, which is also the halfback that's gonna come into play in just a minute, most of the time was spent in this area, right? The 92s, the 91s, the 89s, and at the end of the day, we got the squeeze that brought us above 500 and to close at 504, about 504. So right there, you can see we're going back and forth here through the halfback. We have a small range right within the spike. So we're getting acceptance within the spike. That is acceptance in the spike means that it's very good, that we're accepting higher prices and we're not falling back into the area we were trading in Friday. So right away here, I'm not taking any trade right here. I'm not even thinking about taking a trade. Why? We're going back and forth through the open. So that means no conviction either way. That means that if we go, we're not going to get a breakout, right? We're not going to go higher. We're not going to go lower because there's not going to be buying power or selling power either way. The market is just opening, it's just auctioning, and it's trading without any direction. We have a poor high and a poor low at this point. I'm on pause, so I'm explaining. And you can see we haven't taken out the previous day high. So if we're gonna get any upside, first we have to get outside of the range of Friday, and we have to start extending, which didn't happen. I actually tweeted out, if we're gonna get any upside extension, we're gonna have to first top the high and start to gain some acceptance, meaning spend some time, some period, some letters over here, start to use this previous high as support, and then go higher. That did not happen. But if you were long, that's how you will have monitored for continuation. I'm going kind of fast here. I'm talking about a lot of things. So maybe if you're not understanding, start to ask some questions so I know what is it that you're standing behind in. I'm just gonna keep going so the ones that are following can keep up. The other people who are not keeping up, just ask the question so I clarify everything. I'm gonna hit play. So at this point in time, we already have 3 periods, so meaning 1 hour and a half spent within the previous day's spike, which means acceptance. You can see how the purple shaded area, which means the value area, is already higher. It's actually gap higher from Friday, which is the previous day. This is Monday. Remember, we're looking at Monday. You can see it's going to be really hard to pull value down at this point in the day because we already have a lot of time spent here, a lot of volume. This is the volume, and it's already thick. So it's going to be really difficult to bring the market lower, or at least if it's going to come lower, it's going to be difficult to keep it lower. So here we start to auction higher. Somebody's asking what's an excess high. This is an excess high. You can see how this high has only one single letter. It doesn't have a lot of letters that are single. And here you can clearly see a lot of letters that are single and then the chunk. This high is an excess high. That's why it backs away from it. And this can be a high that lasts for longer than a high like this one. So at this point, there is no direction, and then here's where I took my trade. When I start seeing that you see how many times we went back and forth through the open for 2 hours, A, B, C, D period. We were going back and forth through the open, and I know there is no leadership, and there is nobody selling, and there is nobody buying. So, and value is higher. You can see the value, the purple shaded area is higher. So when I start seeing that deep period starts to action down on low volume, I automatically say, okay, I want to buy. I don't go right away and go and buy, but I'm looking for to buy this market, because for many reasons. I mean, as I have already said, it's not that there is one indication for me that's saying go ahead and buy, but it's many reasons. The first reason being that there is no leadership, and that we're going back and forth through the open. We have to spend a lot of time here. For me, the feeling from the market, I just didn't feel like it was gonna rip down, and I was looking for a buy here. Now, I didn't, as I said, I haven't, at this point in time, I hadn't buy. Now I'm gonna explain where I buy and why. Here I'm just watching, and at this point, I'm saying, okay, what I'm thinking right here. Okay, deep period made a lot of single prints here. You can see single prints means there's only one letter here, and you can see how many letters are up here where the value is. So this is becoming excess. This has the potential to be excess, first of all. So excess means that the auction is over to the downside. And also, you can see how the volume is very, very light. I mean, we have 155 contracts, 400, 600, another 600, another 600. And I'm going to be using this reference for the trade as support, this halfback from the previous day. If we're going to get any meaningful downside, our target will be the variable low right here from the previous day, and the previous day low. That will be the target if I was going to be shorting, which I also thought about doing if we gain it at acceptance below the value high. But I'm going to explain why I actually bought, although I could have short, but I'm going to explain why I bought and why that was the right decision. Here, the next period starts right there. So we have E period. So now we have single prints for the first time to the downside in about 10 days or more. I don't remember any day from the previous, I don't know, 2 weeks in which we had, this is single prints to the upside. This is single prints to the downside. You can see how we have the value, which is 4 letters or could be more. We have the single prints, which separate one distribution, which is this one, from this distribution that is just being created by the opening of E period. So here, 2 cool things could have happened. One thing is that these single prints never got filled, and we started to make another distribution down here, and price accepted down here, and now value will have shifted to this new distribution. But because I wasn't I mean, I knew we were not gonna get selling. Why? Because I said earlier, the opening was very, there was no confidence in the open. The open was just an auction everywhere. I mean, it was going up, it was going down. There was no direction in the morning. And if a market is gonna sell off hard, it's gonna sell off right away from the opening. It's not gonna wait to the afternoon unless there is some type of news or something. If a market is gonna sell off 100 points, it's gonna start selling right away from the opening bell. They're gonna be ready to unload everything. So when that day comes, probably it's gonna be right away from the opening, not in the middle of the day. So here I say, okay, we have single prints to the downside. I'm gonna see if we have support here. If we start to get support in this halfback, I'm gonna buy, and I'm gonna play for these single prints to get filled. And I'm gonna play this Sierra chart is powerful, but sometimes gets a little crazy. Sorry about that. Okay. And my target was coming back to the opening. All periods A, B, C, and D had traded through the open. So my target was, if I'm gonna buy, I'm gonna hold until the open at least. So we start to, I'm gonna speed it down so we can see the action more clearly. And you can see how volume starts to build up right here. So there is people picking a position right here. You can see how this is orange, meaning there is 5,000, 3,000, and you can see it when it's in fast forward. You can see how they are picking up positions, and there the single prints start to now the single prints have closed. That reduces the chances for downside. We come out of the T+2 range. T+2 is just 2 days ago, so that's Thursday. This is the halfback for the current session, this green letter, we're above it. And now the next resistance is the overnight low. And you can see in one period, we came down all the way here. And in one period, the next period, E period, comes all the way back to the opening. I bought about 93 or 94, I don't remember exactly, and I sold for 06. That was the only trade I took on Monday, and I didn't take another trade until today, Tuesday. So that was a hard trade. I mean, that's a trade that I wouldn't recommend anybody that's not experienced do it, because obviously the market is coming down and you're buying in the face of the market coming down. Is like almost like catching a falling knife. But most of the best risk reward scenarios happen when there is the most risk. And if you have a good stop loss, you know, a tight stop where you can buy and hold that, you know, I mean, the range for the day, I mean, I literally made a trade that was the whole range for the day in a small range day. So those are the type of trades I'm looking for. I'm waiting. I'm not all over the screen trying to find a trade, trying to do something just for the sake of doing something. The single prints appeared and the opportunity presents itself, and you have to be there with confidence to click the button and put the stop and put the target and monitor for continuation. The rest of the day, I mean, that's all I wanted to say. I mean, I don't remember the rest of the day exactly. It was very choppy. Today was very choppy also. Today, Tuesday, was very choppy in the afternoon. But the reference, I mean, you can see here, this is the halfback, right? I've been talking about the halfback, and you can see F period, when it auctions down, it cannot touch the halfback. So when that happens, you know, if the selling, when it sells off, cannot even touch a visual reference and it gets bought up before a visual reference like that, you know the selling is very weak. I mean, from the previous stuff I have said, you simply know the selling is really weak. They cannot even touch the halfback. I mean, it's the volume soaks up. There is nobody selling, and I said get out of the way because we're in an uptrend. And I mean, yeah, I know about the VIX, I know about the Fed, I know about whatever you want, but if you're day trading, you do not care about that. You have to look at the flow and what's happening, and if the opportunity is there, just take it. Okay, I'm gonna go ahead and look at the questions. If you have any questions, please start asking so we can go over them in the chat. I see somebody asking again, what's T+2 high? T+2 is the previous 2 days. T+2 means that stocks, I learned this from VWAP Trader. Stocks have a 2-day settlement date. So if you make a purchase of a stock today, you can wait until 2 days for that trade to settle, meaning that you can deposit the money until 2 days after. So you're looking to see if if the trades from 2 days ago are sticky, meaning that people didn't wrote a wooden ticket. They actually pay for the stock they purchased on 2 days ago, and they actually came through and paid for that, and that buying is holding. But you can simply see it as the range from 2 days ago. So this is Friday and this is Thursday, and the current day we're seeing is Monday. So it's just that, nothing fancy. Okay, and we're getting some questions now. Let me go through them. Where will I place my trade at 92? I placed my trade, not exactly, you don't have to be exact. I mean, it's really difficult to be exact. I'm trading futures here, but you can be trading options or whatever. As you saw, when the single prints appeared, you remember the single prints? I'm gonna show them again. Just let me show them again. When the single prints appeared, single prints tend to get filled eventually. If it's not the same day, sometimes it's the next day, but single prints are weak structure. Single prints means emotion took over the market and traders pushed the market lower than what it actually was. So the combination of me knowing that there is no confidence, because when the market opened, it auctioned around the open. So we were auctioning around the open, trading back and forth, no confidence. And then we get this dump, which is just weak hands liquidation, really. This selling is coming from weak hands liquidation, from emotional selling. Is not institutional flow. You can see it's not institutional flow because of the single print, because of the type of volume. This is not heavy volume. You see the 500, 400, 500 contracts, 200 contracts. That gets, I'm gonna play it and you're gonna see how the volume picks up in this area and then shoots back up. They picked up all the volume down there. Look at it. So we don't have single prints yet. When E period opens there, we have single prints. These are the single prints. These are the single prints. D period single prints. Volume starts to pick up right here. You can see how E cannot get to the halfback again. You see that? Now it touches it and then comes back up again and then fills the single prints. And we have a lot of volume now. You see how we had 500, 600. Now we have 3,000, 4,000, 5,000, 6,000. Now we have 3,000 up here, 3,000 up here, another 3,000. We have about, 20,000 contracts bought down here or more. And it comes back up. So, okay, I'm gonna go over another question. If I don't have the software, how do I trade like you? You have to have if you're gonna be trading market profile and references, yeah, I recommend having a real-time market profile. There's many softwares. There's Window Trader, there is Sierra Charts. I know people that have gotten set it up in Ninja Trader with some type of plugin, or I don't know, some fancy stuff. Maybe you can ask a friend about that if they know how to do it, but I use Sierra Chart and just have a CQG data feed. It's about, I pay less than $50 for all the setup. What does the bullish close today tell us about tomorrow? I don't want to get ahead and talk about today and tomorrow because, I mean, today was a trend day, okay? There is no denying about that. It wasn't a textbook trend day, but today was a trend day, and today is the first day of the month. Usually when the month changes, the agendas from the big managers change, and a lot of people were saying that we were gonna get selling the first week of September, which is this week, but we had a trend day today. a real trend day. And we have a lot of excess in the profile from today. I'm gonna show. I'm gonna bring up now the chart from today. Wait. So this is today. This is up to date. This is no replay. And you can see this right here, these letters A, this is the overnight low. In the night, the lower we had was 34.8425. I said my support was 82. So we didn't even test that support. So for me, the market was still in a up auction. And when we opened right away, we have excess here, meaning a lot of single prints. You saw it, a lot of single prints. I said it before, like in the D period, we have a lot of single prints. And then most of the day, most of the value from the day was on the point of control is basically at 35.10. If you want to see it like that, just one tick away from 35.10. And the value is higher than the previous day. This is Monday and this is Tuesday today, and you can see how value is higher. And we also have a spike. So, you know, some people are saying this is a bullish, a bearish close, or I don't know. I mean, unless they are, they can see the future. I don't see this as a bearish close. I cannot see this as a bullish close or a bearish close. I actually don't use the terms very often as bullish and bearish because the wind can change very fast. But for communication purposes, I sometimes say bullish and bearish, but I usually don't say bullish and bearish. This is just, how do I see this? I see this as a trend day with value higher, with a spike up, with a high close. And I already am seeing that the Globex open just has a higher high than the RTH close. So you want to monitor this level right here, 35.2675 for the rest of the night, and see if the activity develops above or below that. Okay, another question. Mm-hmm. So, I mean, I'm seeing a lot of questions here, but, you know, I don't want to get in too deep into a lot of these questions because we're going to have other videos in which that are more basic, and we're going to go over some other stuff that is more simple and more for beginners. I see a lot of you guys are beginners, and that's okay. That's good. There is no shame in being a beginner. We are all are beginners. I mean, I was a beginner not long time ago. And I mean, you need to be around the people that use this kind of language, and you're gonna pick it up eventually. Do I trade? I do not trade Globex on futures. I don't like Globex on futures. It's slow. There is not much volume to interpret. I think there is a more, if you can say, manipulation, and I personally do not like trading Globex. There is enough opportunity for me during the RTH hours, and I'm looking at the screen from 8:30 to 3 with some breaks in between the day, but I'm not going to be watching the screen 24 hours. I mean, it's not good for your concentration, and it's not good for your account. So no, I don't prefer to, unless there is some stuff like the time there was missiles going on and Globex was very active, maybe I can come in for some fun, but usually I don't do anything during Globex. So no M and L period. Yeah, I trade the close. I like the close. A lot of fun stuff happens in the close. I trade the close today. For the trade you did on Monday, what signals were you looking for? If the trade went against you, more single prints, the previous developed for single prints not being able to fill, there was a time frame for you to look for. Definitely, very good detection. Thanks for asking, Ali. Yeah, with yes, I said what I was using as support. Well, the first thing obviously was I wanted to see the single prints close as soon as possible, and that happened. Sometimes the 30 minutes can go by, and E period could have remained with the um, with the single prints open. And if I saw, that the single prints weren't filling and they weren't, the market was just hovering down there and we're gonna look at this again. If the market was just hovering down there and it wasn't going anywhere, I will cut the trade and maybe not even let it hit my stop loss just because the single prints were holding. If the single prints started to hold over time and maybe the F period opened with the single prints still open, and now we have another small distribution here, which what will be D and E period, I will just right away cut the trade because the odds of filling the single prints at that time will have diminished. But you can see that even E period could not uh, tag D period low. So the original D period low held. That was another sign that helped me to hold the trade. And you can see here we have the auction down in D period, come back above the halfback. This is the halfback. Halfback means the half of the range from the Friday range. So we were getting no acceptance on the lower half of the Friday range. You can see how E period was starting to hold and get a position picked up right here. Volume was building above the halfback, and now when E period auctions down, cannot get to D. We have some excess, and we come back up. And here you can tell in the first 7 minutes of E period, we feel the single print. At that time, I'm holding until the open, or even trying to hold until the previous day high. How many % of your portfolio do you risk per trade in low volume days? That's a personal preference. If you're an experienced trader, you can go ahead and use bigger size. If you're a smaller trader, I don't even recommend going by percentages. If you're a beginner trader, go ahead and trade a micro futures. Go and trade one micro. You're better off trading one micro, and in a good day making $50. In a bad day, you're gonna lose 50, $100, but you're not gonna get crushed in a day and lose $1,000 and see your account diminished. If you're a beginner trader, don't even look at percentages. Just go ahead and use a micro contract. Trade one micro. If you feel your account is big enough, maybe trade 2 or 3, but don't even look at percentages when you're starting out. Just trade a micro, so you save your ammo for when you're a more experienced trader and you have more confidence in your trades and in your own setups. And what I'm showing is not for you to go and replicate. It's for you to think and see how I think and how I look at the market. So sometimes you might be watching the market and saying, oh, I see an opportunity similar to how Gaspar thinks, and I'm gonna take it, and maybe it works. So that's what we're looking here for. But to give an answer to your question, you can maybe use somewhere in between 1% and maybe even 5 or 6% of your whole account in one single trade, maybe, if it's in a normal situation. I wouldn't recommend going bigger than 5 or 6% in a single trade. Maybe even if you're experienced, just for the sake of that, you can always, there will always be another trade, even if it's a good or a bad trade. You should always be thinking that there's gonna be another opportunity right around the corner, maybe in an hour, maybe in 10 minutes, maybe in one day, maybe I mean, maybe in 2 days, but there's gonna be another opportunity that's gonna have a high chance of working, and you wanna be alive and with money in your account to take that, because there is no point in just burning everything in a single trade. Um, so looks like that's all the questions. Please, if you have any other question, this is the time. If not, I'm gonna go ahead and wrap it up so the video is small and I can upload it to YouTube and you guys can go ahead and go back and watch it and share it with your friends. And we're gonna do more of these videos. You know, I'm gonna make sure we do one more this week, maybe during the week, or maybe we do one when the weekends and it's Saturday or Sunday. Thanks everybody really for joining and taking the time to listen to me and to ask questions. I really appreciate that. Especially if you can share the video on Twitter later, leave a like and leave a retweet so more people can join the discussion and join the trading discussion and make it this little forum where everybody can share their opinion and what they are seeing and what they think, and maybe also entertain ourselves a little bit. Sometimes the market is slow, so it's not bad to have some company around. So thanks everybody for everything. I see a lot of people saying thank you, so thank you all. I really appreciate that. See you later, guys.